Michael, welcome to the Beyond Tax Season podcast. I really want, what we tried back when the hurricane hit Florida to do this, and now we're 18 months later, and so we've had two client engagements in the meantime, and said, hey, let's do that podcast. So, and as you know, the whole purpose behind this is to raise the level of education and confidence and even camaraderie among the what I'm going to call the small tax and accounting practitioner, that $1 to $2 million firm with 5 to 15 employees. What can they do to increase the revenue to the firm and have a life? So your job today is to give them another arrow in their quiver and help understand how you've experienced, even share your journey, your career journey, and at any point in time, if I think of something that I'd like to comment on, I'll just raise a finger and then drop it. But otherwise, the show's yours.
Thank you so much, Trow. It's great to be here. Really appreciate the opportunity. Yeah, we're out here fighting the good fight, just like some of these other small tax practitioner firms. We're in a really unique time right now. It seems to me personally, at least in my career in public accounting, that things are shifting quicker than most of us can keep up, right? I mean, it's like every 18 months almost, it seems like there's a major tax package that comes out. Usually we don't get the time enough to digest it before the filing season, and we're expected to be experts on everything. And so, it's always great for these firms that have the limited resources, right? We're not talking about top 50 firms with national tax offices here. It's always great to understand, where it's best to focus, provide value, and also just bring more value into the firm for, higher net collected rate type activities.
Well, in our joint experience on those two cases, of the clients had never heard of it. The others said, hey, do you have a connection? And I was actually surprised that, because I'd done one other run at R&D through one of these mills, and it never came to fruition. In fact, we've got another client that we're going to bring you, where he hired somebody and they didn't. I don't think it's a big case. He's a chiropractor. He's very at the head. He's the leading edge of his profession, but I don't know how much he has as far as the whole R&D
Sure.
deduction. But I'm just amazed how powerful it is, and the money that's laying on the table that the accountant on the team can get credit for.
No, absolutely. The R&D tax credit is kind of one of those nuanced areas of the tax code where it was never really made permanent. It's been around since 81, but never made permanent until 2016. And then in the last few years, with the harmful delayed provisions of the Tax Cuts Jobs Act, a lot of firms never really focused on it. But now, after the One Big Beautiful Bill Act, we have some sort of retroactive fix for a lot of different taxpayers, at least in the size that we usually work on. And so now is the best time ever to take a look. R&D is it's extremely complicated, right? This is something that it's not a part of the Dirty Dozen anymore, but it has been a main focus of the IRS to really understand and scrutinize as much as possible. And so there's been a lot of really massive court cases recently where some big name firms have sort of been embarrassed with the claims out there. And not that they're necessarily doing anything wrong, it's a good opportunity for all of us to sort of sharpen the pencil and refine our processes to get to a better answer. But the R&D tax credit, as far as annual type savings from a tax planning standpoint that don't necessarily necessitate an out-of-pocket spend outside of the normal business operations, it's hard to beat.
So let's help our community identify clients where it would be worth you having a conversation with the accountant and or the client.
Absolutely. I think there's two different times, right? One would be clients working on a new product, process, invention, and there's sufficient enough activity to warrant a phone call. It's not just one person working a couple days here and there. Um, and they think there's an opportunity, and they, that's a perfect time to bring us in, right? We're always happy to do this complimentary assessment to understand what the value could be. And if it's not a good fit, we're happy to tell you that as well. But the second time it is maybe a little more nuanced to understand. And what I found is I started my career at a top 25 firm in the specialty tax department. And so often we go to market and meet a client that was interested in R&D or some other of our specialty services, but they didn't want to leave their existing CPA relationship. And so a good time also to start having these conversations is when your caliber of client is getting sophisticated enough to need the services of a top 50 firm. But you don't want to lose that relationship and they don't want to lose you. That's when it's time to start bringing the specialists. That way we can collectively provide those services and help keep the clients around for longer.
Got it. Got it. Well, what is give us some war stories. Uh, like uh,
Absolutely.
you even said it. I said, "What's the perfect client?" And you said, "Well, I have clients that are actually rocket scientists."
Yeah.
That's a perfect fat pattern. Give us some targets that the accountant, the relationship manager, was surprised about. An example.
Yeah, we've actually built quite a vertical in the health life science industry, if you will. And some of it's pretty obvious, right? You have your pharmaceutical manufacturers, you have your prosthetic manufacturers, and things like that. Like those are understandable, right? You're formulating a new product, a new sunscreen, a new leg brace. Um, but where we found a lot of value is really with these sort of specialist physician groups. And so this is something that you sort of briefly touch on, but orthopedic practices or rheumatologists that are looking at implementing new techniques, new procedures, new technology as part of their protocols, that's a fantastic opportunity to look at the tax credit. Obviously, we want to make sure our taxpayer maintains intellectual property rights. We will evaluate other case law exclusions. That is an often overlooked area that, frankly, high taxpayers can really benefit from.
Okay, so I'm going to bring this chiropractor in, the fact pattern, not by name, but he is so innovative. Uh, he's bringing in, brain testing, regenerative medicine, intramuscular needling, and allergy relief, all as part of a holistic package that he offers to patients. He's actually in one of those interesting pockets in America where he's in the lowest income county in one of the states in the United States, but he's got a thriving $1 million practice and uh, bringing in new physicians uh, because of the results that he brings. It's not just sales; it's results. So, well, what would you think about
So
a
there's a
case?
couple of things there that we would absolutely want to look at. So, whenever we are evaluating a new prospect for R&D, we have to always think back to that four-part test, right? It's a new or improved product or process, pretty straightforward and simple. It's that second test where it gets a little bit more nuanced for a chiropractor, which is the technological in nature. We can only focus on the activities that are hard science. And so Eastern medicine, while very valuable and very important, is a little bit harder to get into that bucket. Not that it's not scientific, we just have to go off the IRS's definition, right? And so, regenerative medicine, we've done a lot of work in that space. Think about platelet replacement therapies, different injections for collagen or bone grafting. We've done a lot of work in that space and understand it to the best that a CPA can. But there's definitely some activity we could look at in there. And obviously, to the extent you're looking at each patient as a business component and evaluating different aspects of their life. Maybe you have a different approach for a diabetic patient or a patient with rheumatoid arthritis or other underlying chronic conditions and how that would impact the treatment as a whole. We can evaluate that obviously on a client by client basis. We're not sitting here saying that it's objectively going to qualify, but getting into that client specific fact patterns, it seems like there may be enough there to at least have a conversation.
Cool. Well, then let's coach the community on how to bring you in as a specialist and how to also make money for their firm. Where have what models have you seen uh, there? And
Sure.
I'll follow up with the one that we're using with one of my clients.
So what I found that works best about when to bring in specialists is frankly too early, right? It's always better to be too early than too late than when maybe an opportunity is passed. For example, the One Big Beautiful Bill Act for any of the retroactive fixes, we only have until the 4th of July. So it seems like a far time away, but it's going to get here before we realize it. And so, it's always best, the firms that we work best with, we just stay in constant communication with. Even if there's not necessarily something of value to discuss every time, we just want to make sure that we're kind of in each other's ear because, doing this sort of consulting work for this long, you would be surprised how often I get the question of, I'm unhappy with my current tax return preparer, where can I go? And I'm always looking for good firms all across the country that we can help bring into our network to as referral options for us. Um, but as far as which models work, we've seen a little bit of everything. We've seen where the CPA or tax return preparer is extremely active in our process and wants to stay involved, and that's great. If they want to be part of it and learn more, and if they're intimate with the day-to-day operations of the business, that they can be a real valuable resource. We've also seen it where they like to hand off and step out of the way and then wait for our final report at the end. And so both options work great. It's kind of based off the relationship that that individual has with their client, the trust that they have in us to get the work done professionally, and just what we'll play that on a client by client basis. But I think it's kind of important to add right here, Taxter is a CPA firm. We don't provide audit support. We don't provide audits or tax return preparation, but we are a CPA firm. And so we are held to that little bit higher standard. We are able to represent clients for the IRS. And so because of that, it's more of a smoother process than maybe some of the more national consulting firms.
So how would a accounting firm that thinks they have a R&D tax credit prospect, how would they make money from this in working with you?
Sure. Well, there's a couple of things. I mean, obviously, if the client's never looked at the opportunity before, there's the retroactive fix, and so there's additional fees to be generated around amended returns, both at the entity and perhaps personal level for pass-throughs. Um, the connection that we will both have with that client moving forward just helps keep clients around longer. We have found, they're not out searching for a larger firm that can provide everything in-house. And then, where appropriate, where they're able to help us out specifically in certain areas, we can look at definitely consulting fees as well.
Okay. Uh, Now I can see that already. In fact, we did a fixed monthly subscription, not realizing the ancillary work created with all the amended returns. So that's a learning curve to know ahead of time. Hey, client, this will happen, and then this will happen, and there will be fees here and fees here. Uh, so the way we work with clients is that we have what we call a proactive tax planning uh, monthly charge as part of the ongoing subscription. So that is a way for accounting firms to bump the revenue up, and it also creates that wonderful relationship tension of, hey, they paid us. What have we done for them lately? And on the other side, the client says, hey, we paid them. What have they done for us lately? So, and I've always liked that kind of relationship tension, as opposed to the other where every time I call them, I get a bill. That puts a damper on communication as opposed to opening up communication.
No, absolutely. And fee fatigue is very real. And that is something that, we absolutely try to work on and be proactive as part of our practice. But yeah, the relationship tension you mentioned I've witnessed it. So I started the firm a little over 4 years ago, and it is very, very true. I like to call it stickiness. If we're all working for the same common goal, the same common client, it definitely helps it definitely is mutually beneficial. Um, they can help remind us when it's time to reach out to renew, vice versa. And, I often find that we stay in communication with these clients throughout the year, even when there's not an active project, just because they're thinking of us or their CPA firm is thinking of them, and we're all in constant communication.
Well, that brings up an operational thing between us. What is your process? Because the two clients that we have shared, of they have ongoing R&D. So is that something that you will reach out? Is that our job? How should we plan on doing that? And therefore, I'm also leaning or trying to lead to how should firms that choose to work with you, what does that look like on an ongoing basis?
Sure. Well, so our tagline in the for the firm is tax consulting simplified. And so we try to live that in every single aspect possible. And so when we bring a client on, we like to own every aspect of that relationship, not necessarily to be controlling, but just to stay on top of the game. And so our annual process, we're about to start kicking off our annuity cycle. So that's clients we've done work for in the past, reaching out to get them engaged for 2025, hopefully starting on some of that analysis and qualitative support, with the goal of at least having good estimates by the end of the year for estimated tax payments. A lot of clients are going to have massively different tax bills for the 2025 filing season. And so whatever we can do now to help them keep more cash in the business, especially at the end of the year, is the most value we can bring.
So without using names, but the two clients, have you contacted them yet, or should we be contacting them
I'll be reaching out this week.
this week? Okay.
Yeah.
Is that just because I asked you?
No, it's on my calendar. I'm doing presentations with a lot of our partner firms right now, all around the R&D tax credit has changed more in the last 2 years than it has probably the previous 20 or 30. So we really go out of our way to try to meet up with our good referral CPA firms that we work a lot with, do in-person presentations. So walk them through the changes of the new tax forms, walk them through the additional filing requirements for amended returns, walk them through all the changes under the One Big Beautiful Bill Act. Because webinars are great, calls like this and podcasts are fantastic. Until you go through it with a specific client fact pattern, it's hard to remember all these things.
Right. No, yeah. So I'm going to put on our calendar that, so anyway, you're reaching out to the two clients.
Correct.
Okay. And you'll CC the lead accountant on the firm.
We always go out of our way to make sure we include the tax return preparer. Granted, each firm has different uh, uh, preferences around that, and so we don't want to bombard too many inboxes. But if that's the preference, we'll absolutely keep them in the loop.
Yeah. Perfect. I'm trying to think, what else do you normally communicate in your first conversation so that people can be prepared for what answers they should have before that first conversation?
Absolutely. The first time talking to a client, especially if maybe they've never heard of the credit or maybe they've only heard it in passing and heard sort of mixed results, um, that first conversation can be pretty difficult because it is a lot to understand the first time through. And so I always try to prepare clients that, when we go through our proposal process, we do request like a lot of information, and this is something that may never turn into a project. And so I always try to let them know like this is a much bigger lift than maybe other tax planning you've looked at before. Um, it's a lot more in depth. It's going to maybe feel a little more intimate. We're going to ask detailed questions about the operations of your business to really get down into the roots of what is going on. And it's not meant to pry, it's meant to document. And so I always try to prepare them. That way it doesn't seem so shocking that first time through. But we do find that once they turn into an annuity client, that it is a much smoother process, and it's can be really valuable for their year-end tax planning to know that the second biggest operational expense of their business is significantly reduced by taking care of this tax credit every year.
This leads into a topic, the quality of the accounting, because you're using the word project. And I'm attempting to change the accounting profession to say relationship. And then I'm attempting to change no more bookkeeping. We want professional accounting, knowing that a dollar that starts here as an invoice or a PO or whatever and moves its way through and has labor costs attached to it and all that kind of thing. The professional accounting is so important. So I'm going to ask you, when have you or have you ever experienced the professional accounting, lack of professional accounting led to you not being able to help the client?
So I will say I'm very lucky that so far, even some of our biggest challenges, we have found a way to help them. And so when I say biggest challenges, we always start with W-2 wages. And most of the time, clients have a sophisticated enough payroll system that they can pull this in some sort of electronic format. Sometimes we are manually typing in names and box one wages for days on end. I had a client with about 1,000 employees a couple of years ago, and we were doing 6 years worth of work for them. And so we definitely spent some weekends typing in names many, many times. Just for some reason, they wouldn't convert well with any of the software we had available back then. Nowadays, we have access to different AI tools, and so that's a lot better process. I will say though, there has been opportunities in the past where we know that there could be bigger tax credits, but because of poor accounting, we weren't able to take full advantage of that. So on the labor side for the RD tax credit, we always look at W-2s, like I said. So those are usually available. It might be harder to get them in a format we can digest, but they're usually always available. Where we sometimes really face limitations on supply cost or rental or lease computer cost, those are buried deep in the GL, and if they don't have,
Slow down a little bit and roll the tape back. Labor and payroll, I got.
sure.
What were you saying you were having? You've experienced problems where and what? I want, my mission is to help accountants understand there is a difference between bookkeeping and professional accounting. So you were saying what areas made it tough for you to you get the benefit because of the accounting wasn't up to snuff?
Yeah, so with certain industries, like manufacturing is the primary one, we can include prototype supplies, right? Let's say it's a widget manufacturer and they create widget 2.0 versus 1.0. They build 1,000 of them for a test run. If we can't identify those costs or we come up with a defendable way to estimate those costs, we can't include them as part of our tax credit. And so there have been instances where we know we're not claiming the full credit available just because we can't get to good documentation. Another reason, another instance where this comes in is for professional service firms, so engineering firms or architecture firms. We can only include projects where our taxpayer has economic risk. So let's understand it's firm fixed price. And so if a client can't tell us which labor hours relate to firm fixed price versus time and materials, we might not be able to get the work done. And if we do estimate, that's it's something where we're not completely short of as much as we'd like to be. Or, maybe it's certain task codes where they can't break it out, and so we just have to leave that opportunity on the table. And so as you said, solid professional accounting, not just on the expense side, but also on the income side, to really break out revenue streams, under different contract types, under, different entity types, whether it's commercial versus government. All of that can really help when it comes to these sort of specialty consulting type services.
That was gold. Thank you.
Yeah.
That was very, very helpful. Uh, well, Michael, as we wrap up here, any parting comments, any uh, pithy wisdom you want to share?
I would say I used to be part of a networking group where they would survey Exit Planning Institute. And so they would survey business owners across the country, and they would always ask them, who's your most trusted advisor? And for years, there's always the CPA was number one. But however, 2 years ago, the CPA dropped to number three. And they didn't really get much understanding as to the reason why. And I personally think it's a couple different factors. I think it's the average age of CPAs going up, less talent coming through the pipeline, demand, fee pressure with private equity buy-ins, pressure to offshore, implement AI. The CPA profession's been put through the ringer for the last 5, 6 years. I mean, The model that worked 15 years ago to build a very successful, profitable firm doesn't really work anymore. And that's not no fault to the founders or their expertise or business development ability. It's just the industry, we're getting pressure from every single angle. And so, to the extent that we can team up together and keep our clients close and fight the good fight, I think there's a lot of opportunities still out there. Um, and
That's
just building that right team.
yeah. I mean, I understand the problem. I think there are a lot of accounts, if they don't understand it, they're feeling it. They're like the boiled frog, right?
Yeah.
And so this trips into another thing that I want to help accountants understand, uh, that they've become numb to not only their clients' problems, but their clients' successes. Because it's just numbers and I'm moving them down the line of, I know the solution. The solution is better relationships. Don't think
It
of them
is.
as an hourly billing or a project, but a relationship, and have fewer and deeper relationships with clients that feed your soul. Boy, that sounds like ooey gooey pablum, but it's the truth.
It is true. It's a lot harder to terminate a relationship with a friend than it is with an invoice.
Do that again.
It's a lot harder to terminate a relationship with a friend than it is a monthly invoice.
Wow. We're gonna have to figure out how to make that the name or theme of this. That's, I think you stumbled onto, well, we're gonna let ChatGPT help us
There
come
we
up
go.
with what to name this episode. So, Michael Laur, thank you so much.
Thank you, Trow.
We
Great.
look forward to sharing your wisdom in future episodes.
Thank you so much. Love the opportunity and happy to be a part of it in the future.
Perfect, man.